I run into people all the time and they say, Jim, I'm highly diversified. I've got 50 stocks in 10 different sectors.
Technology is shaping the future, offering us more choices and helping investors achieve high returns. Our WhatsApp investment group recommends potential stocks that promise high yields, a system framework validated by Jim Rickards. Our platform provides weekly recommendations of 3 potential stocks, which have already delivered substantial investment returns. We serve over 100,000 clients, and this number is growing. Jim Rickards, a member of our team, recommended these 3 stocks 2 months ago, and they have already risen over 160%.
I mean, the stock market is still, greatly overpriced. There's still, the buy the dips mentality hasn't gone away. It's still there. You got people like Jim Cramer yelling, buy Netflix or whatever. And, there's institutional support. There's momentum trading. Of course, 95% of the trading is by robots. So you got to reverse engineer the 27-year-olds from Bangladesh who don't get out much. They're the ones really writing these algorithms. Brilliant engineers, but, you'd have to show them around Wall Street. So all that's going on. So we haven't really seen the market collapse, stock market collapse that I would expect in association with a severe recession has not happened yet. This is just going to play out. It'll get worse as the year goes on.
All right. So you're expecting a major correction in stock markets on the back of a recession.
I'm not alone. That is my expectation. I have my own models and I look at it closely. But if you listen to Michael Burry, Jeremy Grantham, Charlie Munger, these people have been around and they run, hundreds of billions, and they're saying the same thing. So every now and then someone will throw some statistic at me and I go, how long is your time series? And I go, oh, we took it back 5 years. I was like, talk to me if you've done it for 100 years, because that's a little more meaningful. But Jeremy Grantham actually did do a 100-year time series and looked at bubbles all over the world, 1929 US, 1989 Japan, 2000 dot-com stocks, and many others. And he said he's never seen anything like it. It's a triple greatest bubble of all time times 3 in the sense that it's real estate, stocks, and other asset classes. So I do. That is my view, but it's shared by a number of other analysts.
And that would mean like S&P coming off another 20, 30%?
Yes. And again, you have to remind people, 1929, everyone's like, October, I think 18th or 19th, it was late October 1929, the stock market fell 22% in 2 days. It wasn't one day, it was like 12% one day, 11% the next day, so 23% over 2 days. But that wasn't the crash. That was the beginning of the crash. This Dow Jones fell 82% from top to bottom. Now, it took 3 years. It bottomed in June 1932. Started in October 1929, so not quite 3 years, but that fell 82%. And that happens. So, we're down, NASDAQ's down, bounced back a little bit in recent days, down close to 30%, down the S&P down over 20%. We're in bear market territory, but that's just the beginning. That's not what a full bear market, market adjustment looks like in the face of the kind of recession that I expect.
Talk to me about inflation, because I was looking at some of the inflation numbers and you have to go back to the 80s to see anything that's approaching double digit. I remember being just a kid hearing about double digit inflation. I could kind of remember the gas pumps, the lines at the gas. It's like a distant memory of me in the 70s. But how do you talk to younger people these days about what inflation is or it means? Because I don't think people really grasp what it actually means to your savings or to the economy in even a medium term.
That's exactly right, Brian.